Hello Hello, everyone. Welcome to 2026. I'm Shane Vernier. This is the Switch Markets and How to Trade team. I want to welcome everybody back to the trading room. I know it's been sort of an extended holiday break. We went to Christmas, then we saw New Year's. We saw everything that really happened in between. There was a lot of news stories that hit, a lot of geopolitical news that's out fresh today. Shouldn't surprise anybody, the first trading day of the year. And what do you have? Well, you've got big fresh news coming out of Iran, a lot of saber rattling, Venezuela. All of a sudden, we're going to see some negotiations, maybe in Venezuela. We've also got commodity prices all over the map. Natural gas, sort of the big movers on the commodity market right now. Silver having a quiet open to 2026 after an absolutely huge 2025. And then we've also got some movement, a little bit of movement in your forex. The dollar's pretty much flat. And this shouldn't surprise anybody. Today is still very much a holiday session. I wanted to get started with a live stream today because I wanted to get back in the mix and take a good look at my charts. But we'll have a full marching orders for you on Monday about how to approach this year, about goal setting, about what the pace, what your trading pace should look like as the new year gets underway. I always say that it's always better to be cautious with January's trade. There's no question about it. January, February, March, April. Great times to be trading. Great times to be trading. As a matter of fact, that's my favorite time of the year to trade. Aside from just a few weeks there in the fall, typically your spring months are going to provide a bulk of your opportunities. That's what we have. So we've got late winter, we got early spring. We're going to have an opportunity to make a lot of trades, break down a lot of markets over the next 160 days or so. It's going to be pretty raucous. So I'm excited. I'm always excited and ready to trade. I love going on a break and then coming back and taking a good look at what's been going on. To be honest, sort of a little bit sad that I missed the huge breakout in silver. We're going to cover that. A lot of volatility in gold right now. Gold's sort of pulling back a little bit. Still very near all-time highs. Silver above $70 an ounce. You've got U.S. oil right around $56, $57. I love that placement. I'm going to give you the key level in U.S. oil and then also the Euro USD on the move. We've got a nice level to work with there to open the year. And then the U.S. dollar Japanese yen 4-hour 920 EMA crossover is in play. So good to see everybody back. A lot of familiar faces here. T. Marina, good to see you. T, welcome. Let's see. Slim, how you doing, Slim? Yo, Happy New Year, my brother. Good to see you. Good to see you, Slim. Good to see everybody back in the room. Tuku, good to see you. Andrea Gorwal, always a pleasure. Lita. A lot of familiar faces here. Absolutely happy to be back. The first day back off of a holiday, especially in the markets, you've got to be careful. You've got to be careful. So for me, a general rule of thumb, I was asked this before the holiday break. Shane, when do you really start trading, after the holiday break or after you get back into the office? It's going to take me probably a good 3 or 4 days to nail down these markets and get my key levels that I like. So for me, Monday, Tuesday, Wednesday, going to be a lot of prep, going to be passing on a lot of trades. But if I do see a premium come my way, I'm going to take it. We've got sort of a big, it's not a huge slate for next week. It's going to be all about the U.S. jobs numbers. It's going to be all about NFP, and there's just going to be a lot going on. So I want to welcome everybody. If you want to trade, you're in the right place. Today's going to be more setting the table and maybe taking a look at a few markets. I'm more than happy to look at any market you guys would like to look at. So if you want to send me a message, I will be more than happy to do just that. I'll look at whatever you want. But right now, we're going to look at crude oil. We'll look at gold, silver, Euro USD, and also the dollar yen. We may look at U.S. equities, but I'm just not feeling it. It is really dead out there. This is choppy trade on the equities markets. Most people are either in airports or they're still partying after the New Year's holiday. So there's not much going on there. So let me see. Gordon Williams, good to see you. Gordon, welcome. Welcome. Tough break for the Texas Tech Red Raiders yesterday. I saw that game, and holy cow, that offense was brutal. Great defense, tough on offense. Absolutely great stretch of football, though. If you're a college football fan, the last 36 hours have been pretty fun to watch. I must admit, the Ole Miss-Alabama game last night, unbelievable. Absolutely unbelievable. All right, guys, so let's go ahead and get into this. Remember, if you're looking for a broker and you're in a supported municipality, check out switchmarkets.com. They've got really everything. They got everything you're looking for, thousands of markets, zero commission accounts, huge leverage, tight spreads. You're also going to be able to see a lot of our new content is going to be on the Switch Markets YouTube channel for 2026. That's almost exclusively where we're going to be posting new videos, strategies, tutorials, all that. And then always remember, there's just an absolute ton of free resources. You just go there, EA Tools for Traders. I have one that I'm developing right now that probably is going to be out towards the end of the month, but it's a pretty good one that deals with gold and silver. Free trading journals, market movers, anything you need, it's right there on your free resources. So be sure to go ahead and check that out. If you're leaving already, look at another 12 days. You've got a winter promo gift, a $5,000 bonus. So a lot of these are credit bonuses. If you're looking for a place to trade, check out Switch. Now, I did take a question earlier today. I had a nice Nice meeting with a young trader that's just getting involved in the markets this morning. And I said, the big question was, hey, what did the switch markets service U.S. clients? And I go, no, it doesn't. No, it doesn't. So if you need a U.S. broker, feel free to hit me up on how to trade over at howtotrade.com. You can send me a private message, and I will be sure to get back to you and sort of point you in the right direction if you're looking to trade forex or maybe futures. I'll give you some of mine that I've worked with over the years. I won't necessarily vouch for anybody's reputability except Switch, but what I will do, I know the people at Switch. That's why I know the folks that run the back room, and I know that they're on the up and up. But the rest of the market, or the rest of the brokers, I will tell you who I do business with if you need one and you're in the United States. So there you go. All right, let's see. The biggest thing I want to start off with is WTI crude oil. I'm a crude oil specialist. It is really what I do. Probably, I don't know. We do a lot of things well as traders. Some of us, we go through hot spells and cold spells. U.S. oil, I felt really great about. I felt really great about getting that late year run towards yearly lows, and we got it. We absolutely got it. Went down to about 54.98. Well, that's 2025's low now. So when we're looking at WTI crude oil or U.S. oil, 2025's low down there right around $55, $54.98. That's a big deal. That's a big deal. Do I believe we're going there? Yes, I do. Yes, I do. Right now we're trading about 57.05. Now here's the big question. Do we get the big extension? Do we get price extension beneath $55? I don't necessarily know. I don't know. There's a lot of news stuff out. We're going to cover your geopolitical news in a minute. Iranian protests, a lot of saber rattling. That can drive crude oil north in a hurry. You've also got an issue down in Venezuela. Both of those are short-term bullish market drivers, but if they are rectified in short order, meaning if the problems are solved and all of a sudden you see more of a pro-Western, maybe a pro-U.S., maybe a somebody that they will let put a lot of oil on the market, you could see oil prices really plunge after these geopolitical issues get solved. So I'm watching very closely. We're going to hit those in just a second. But as far as I'm concerned, U.S. oil, I mean, absolutely just really a beautiful late year run right around when we kicked off, about the 16th of December. And then you come back and you see that we had a rally up to 58.50, could not get over 60, 58.88. And then we've just sort of been in rotation ever since. So trading crude oil, I want to see this market make a definitive move to open the year. I believe it's probably going to be bearish, but I'm not holding shorts. The shorting's over from last fall. We're going to sort of shift gears in WTI as we get into the spring. We're going to start talking about more of the bullish case when the bids are most likely to hit the market. Typically the second week of February. It's already in January. The second week of February, probably another 6 weeks, 7 weeks. You're going to start to see the traders start bidding crude in anticipation of spring seasonality. We're not there yet. We're not there yet. So I think we're going to go down and take a look at that yearly low. I would be absolutely shocked if we don't trade beneath 55 and really establish at least a test beneath that zone. I think that's probably the biggest trade on the board for me early in the year. Keep an eye out for the trade ideas. I'm going to be issuing one later today, the first one of the year. We'll probably have a trade update out. It's going to be much later today, so it's going to be locked and loaded for Monday's session. So definitely keep a close eye on that, and we'll get you in the loop and make sure that you're ready to hit the ground running with a solid trade idea to open 2026. Now, what everybody wants to know, I've been asked, no kidding, I mean, no shortage of a dozen times, maybe more, from friends and family. Shane, what about gold? What about gold? What do you think about gold? What about gold? What about gold? I go, what about gold? What about it? You're in a complete bullish trend. There's absolutely no question about it. You're in a monthly bullish trend. If you remember last summer, this bearish compression, this bullish pennant and that bearish compression right there that set up in July was really the precursor for a major breakout, a major bullish breakout. And we talked about that pennant for 90 days. I said, this thing is setting up to really move higher, not just a little bit higher, but a lot of bit higher. And there it was. There was the big breakout of that bullish pennant. And now we've got the big run towards the top side of this market. So when I take a good look at what's happening here in the gold market, a couple of things jump off the chart. The first thing, 4,500. Okay, that's the new key level to the top side. You can see that our top of last year was 45.50. So if, in fact, you're interested in maybe taking along, beware. There's likely to be some compression between 4,500 and 45.50. Absolutely no question in my mind. Be very, very careful up there if you're taking longs. Now, for me, you want to be on the long side of this market. There's no question about it. The real question and the real challenge for us retail traders is how are we going to get involved? Do we want to buy now or do we want to buy later? Well, I would wait. I love waiting. I think that you make a lot of money waiting. It doesn't always happen that way, but a lot of times it does. And you can see right here, we went up, and there's your big sell-off. There's your big gold sell-off on the 29th of December, and now we're just sort of rattling around right around that 4,300 level. To me, do I want to buy or sell it? Is it a buy or a sell right now? Really tough to buy it. I need prima facie evidence. I need a reason to buy it. I need a hot level, something I can hang my hat on, something that'll get me involved with a little bit of confidence. And when I take a look at this chart, I have no confidence. Believe me, I'm a confident guy, and I don't really bat an eye at much. I have a pretty good idea what I can do in the markets. This right here, this big sell-off, that's what we call a lack of liquidity sell-off. That is a holiday sell-off. You don't have the volume. You didn't have complete participation. The sellers stepped in. A lot of you guys call those liquidity sweeps, fair value gap, whatever you want to call it. To me, it's just a massive sell-off of about 4.5% in one session. Now, that's a big deal. Is it as big of a deal as getting a 4.5% sell-off maybe next week? I say no. I think that right there tells me everything that I need to know about low liquidity trading. Just because the market really moved doesn't mean the whole world thought it should move. It meant that there were some large block orders at key levels, and they plunged the market. There's no question about that. So if you're looking for an institutional footprint, maybe, that would be one. Keep a close eye on that range. That's a very important range. Now, we've tried to pull back, and we've really got some resistance to the top side right around that 4,400 zone, and we've seen a little bit of selling since then. To me, it's very simple. I want to see a couple days of trade. I want to see this thing set up, and more than likely, it's probably going to take, I don't know, till the end of next week till we have a real good idea, but it's definitely going to take a few days till we can see what the sentiment is in the gold market. I still believe it's going to be bullish, especially with the rate cuts coming our way next year. We're going to talk about those in a minute. So for me, if I want to buy, spike low there, spike high, Fibonacci retracement, there's your money level right around 4,300. 42.98, 4,300. That's a pretty damn good buy down there. If you want to take a look at maybe your 30-minute chart, you can see exactly what's developed. Absolute good stuff. There's your big plunge back on the 30th of December. Not a tremendous amount of volume driving this action. Sell-off, rebound, and now you're up and now you're back down. A lot of people ask me, actually, I got asked this earlier today, so I want to address the question. Shane, can I trade the XAU USD in the United States? And I said there's lots of different ways to trade gold in the United States. If you want to trade that pair, you can certainly find somebody to help you trade it. The big question is the leverage and the spreads. Now, the big problem with trading something like the XAU USD is that spread can be absolutely epic. Right now, I'm watching it oscillate between 68 and 42 pips, and that's using the data feed of one of the biggest brokers in the world. I personally like to lean towards gold futures. Gold futures, I'm not telling anybody what to trade. I mean, definitely there's definitely more depth in that XAU USD market, but those spreads, that bid-ask spread can be an absolute bear. So for me, when I'm taking a good look at maybe this is February gold futures, we have decent volume here. That was a pretty good volume day, about 308,000 contracts back on the 29th of December that brought about that sell-off. But if I was going to look at that 30-minute chart, I bet you we could see a sweep maybe just within an hour of time or so. That was a big time. I would probably call it a liquidity sweep. It was institutional participation, large block orders. Folks like you and me weren't sitting there on the 29th of December. We just weren't. Now, what does that mean for broader sentiment? I still believe we're bullish, but when I go to my futures contracts, I say, okay, do I have a buy on my weekly? And I'd say, yeah, we do. Same basic market structure. You'll notice that nothing really changes, just the levels. And the other thing that changes is you don't have much of a spread here at all, if any. I think it's going with 0.2, 0.3 as your spread, which isn't really accurate. It's more like it's a fairly even market, and you can make sure to get in and out with efficiency, especially next week when we start to see that volume kick up. So big-time move here. Definitely a negative week. Pullback zones right around that 43.36 area. That's what I'm watching in gold futures. And when we get towards today's close, I think that's going to be a very, very big deal. If we close above that, I'm going to feel pretty good about holding longs next week. If we close below it, I'm probably going to be painting the picture, a very bearish picture to the downside. So definitely want to cover gold. Now, the biggest thing you want to look at here is where's the money at? Where is the money really at here? There's no question about it. We're seeing governmental institutional participation in the silver markets. There's absolutely no question. I listen to a lot of folks talk silver. There's a couple of brokers that actually contribute regularly on a couple of radio shows that I listen to, and they come on, and when they talk silver, they're talking shortages. They're talking demand shortages. They're talking about Chinese accumulation of the actual physical metal. That's very fascinating what's going on in the silver market right now. I don't know that all that's true. I don't have any inside sources. I don't know anybody that works at Lockheed Martin that's saying, hey, we need a ton of silver for our missiles, our ballistic missiles. I don't know that. Some people claim they do, and if they do, that's great. What I do know is this. There's no resistance to the top side of silver. We are looking at key levels, and the thing about a trending market is when a market trends, it's looking for key levels. It's looking for a place to hang its hat. Now, it's not necessarily 100% certain of where the top of this market is or where the bottom will be, but you'll notice consolidation, you'll notice compression, and you'll notice a lot of participation, a lot of traders ready to go there at 80. Absolutely 100% right. 80 right now is the 5,000-pound gorilla in the room for silver. So if I'm watching the silver market closely, I'm saying, okay, Shane, what do you think? And I go, well, clearly we want to be on the long side of this. I heard projections, and I'm not going to give my own projections until I see at least a week or two of price action for this year, but I saw projections by the end of Q1, early summer, they're talking 120 or maybe even 200 by year's end. And I go, whoa, we got to pump the brakes at some point. You're telling me silver moves another 100 or 200% higher from current levels? That's what these guys were saying. I don't know that I believe that. I believe that we are going to go to 100 now. I think that that's pretty much locked and loaded, but I could see that taking until June, until August, until next September. It really does depend on what the Fed does with interest rates. It also depends on if we're in, sort of that AI bubble doesn't burst. Remember, a lot of the silver demand's going into data centers as using silver as a conductor. If you see an AI slowdown, then there's going to be a slowdown in silver. It's interesting stuff. Now, the other thing about the silver market that a lot of these experts are saying is like, listen, there's a serious shortage of silver. The demand is there. Institutional demand's there. Manufacturing demand's there. Retail demand's there. Okay, that's great. How long does it take us to get more silver in the market? They say a new silver mine takes anywhere from 10 to 14 years to get up and running, to get development. That's from exploration, finding the silver, to bringing it online. So that's a big deal, 10 to 14 years. So it's not like me and you can just get a loan and go open a silver mine right now. However, there have been some projects that are ready to come online in the next several years, and I imagine that those are going to be incredibly lucrative. A lot of the big companies now are going directly to the mine, and they're trying to secure the raw ore coming out of the ground, rights to that ore, instead of acquiring the metals on a secondary market. It's very, very fascinating what's happening here. So the silver market is definitely bullish. There's no question about it. $80 seems to be right now sort of the intermediate term top. We saw a high of 84 and then a sell-off back down to 72 the same day. And now we're starting to see the market really settle in at 80. So keep an eye on last year's high, which is up there right around 84. Key level right now is 80. So if I'm looking to trade this, what do I want to do? I want to buy it. I definitely want to buy it. I don't want to be a hero. I don't want to sell it. I don't want to bet on a big retracement because if we're wrong, we're going to get taken out to lunch, which is nice. I wouldn't mind somebody taking me to lunch. That'd be a nice thing. But I don't want them to take me to lunch and then pay with my money. I'm not interested in that. You'll notice the market structure is very good. It's very good. Spike low back there, right back there on the 27th of October. There is your upper extreme. Okay, that's more than likely. That's going to be 2025's high. Right there, up there at 84. Well, it is 2025's high. We're already in 2026. So your pullback zone right there is at 38%. That's the kill zone right there for me. I'm looking at 69.5. 69.75s, maybe even 70 evens, and that is definitely going to be robust scalping down there to the bull. There's absolutely no question about it. If I'm analyzing this market, if you want to take a short, I understand. It's just too big. Your stop loss realistically is going to have to be up above 85 to give yourself an opportunity to maybe catch an earlier pullback. I'm not saying that you won't get it. What I'm saying is it's just incredibly risky. It's hella risky. Very risky. So you don't want to do that. You want to wait. And if you're going to short this market, I probably would wait to short 80. At least that cuts down your liability way down and gives you a chance maybe to grab some rotation back to the mid-70s and walk away with a profitable trade. Now, as far as the bids go, 69.35, 69.50, I mean, those are going to be really difficult to beat in the short term. The big problem that we have as retail traders is just sticking in there long enough to get them. We got to wait. We got to be patient. That's for sure and certain. Let me see. Sands, good to see you. The mentors of mentor. I don't know if I'd go that far, Sand, but thank you. I sure appreciate it. Tina Jing, welcome. Happy 2026, Tina. I'm confident you're going to have a great year in the markets. Remember, the success is all about discipline, stick-to-itiveness, being tenacious, and wanting it bad enough. And if you can do those things, I think you're going to find yourself in a very good place. I'm going to talk a little bit about yearly psychology on Monday. I'll tell you how I break down my year. I break it down quarterly, but I look to make money every single day. So when I'm tallying up my wins and losses, I'm looking at my days and my weeks. If I walk away and I didn't make any money for 5 sessions of being in front of the screen, more than likely I did something wrong. I took a loss I shouldn't have, or I was not aggressive enough. Those are typically the way that it unfolds for me. Now, on a yearly basis, I'm looking at quarters. Right now, the goal is to get out of the block strong, put up good numbers for Q1. You find yourself in a good position after Q1, it becomes very, very, very straightforward on how to trade the rest of the year. Profitable Q1, we're going to take those profits, leverage them in Q2. We're going to leverage them in Q2, Q3, coast home in Q4. That realistically is a way that you can stick in these markets for a long time and maintain your health and your sanity while doing it. Let me see, T. Wow, isn't that a bit of an overprojection on silver? I couldn't believe the projections, T. They were talking about 120, 220. The guy was throwing out 220s. And you know, I'm not saying that it can't happen. I'm really not saying that it can't happen. But 220, really? So that means we're going to cut that gold-silver ratio more than likely in half? Because I doubt you're going to see gold up at 8,000 to maintain, right? Very fascinating stuff. Is it the year of silver? I know that there's a lot of bidders there and there's no resistance. Typically, that means the top side's good. Let me see. Tina, what price should we get in? Yeah, I mean, Tina, I can't tell you exactly what to do. I'm not a financial advisor. I'm more of an analyst and a trading coach. If you ask me, have any questions, it's a good one. Like I said, for a trade, 69.50, 69.75, those are pretty good areas. 70, pretty good area. For a long-term investment, the thing about investments is you make money when you buy something, not when you sell it. So you've got to be very conscious about your trade locations. I would be looking somewhere down in there, 60s, maybe even a 55, somewhere down in that zone between 62% and 78. That's not a bad area to take maybe a position for Q1. And here's the thing, you may be able to get it. It's just a question of, how negative does sentiment get here to open the year? Are institutions taking profits before we move on to the next deal? We don't know. But for me, the bids are down there. Now, if you want to be old uber patient, if you want to be like Warren Buffett patient or Charlie Unger or all these greats of finance, they're looking for discounts. They're looking for extreme discounts, meaning they would be looking for something seismic to happen in the silver market. They would be looking for something to really drive prices down. So what would that be? Well, basically, you're going to be looking at the plunge of April 2025, the tariff panic to your all-time highs, and you're going to be looking for a deeper pullback. Now, 62, of course, that's going to be fantastic. But honestly, those long-term investiture guys are probably looking at 49s and 40s, maybe wanting to see a long-term compression in between that zone before taking the bid. Of course, that's risky, and that's real easy to do when you're a 100 millionaire and you don't need to trade to make money. You just sit around with a pocket full of money, and if the markets come your way, you go for it. That's easy. I mean, that really is what investing is. It's getting things at a discount and figuring out how they're going to appreciate over the long term. Is that possible? Is it feasible? It is, but certain things have to happen. And right now, I cannot justify taking a short in the silver market and trying to hold for 50. I don't see that. It's very bullish. There's no question that we had a huge bullish year last year, but that doesn't mean the 2026 can't trade maybe somewhere in here and give you a great opportunity to get on board before the big rally comes, which I don't disagree that we're going to 100. That's why the 70 bids are kind of attractive to me right now. There's a lot of momentum in that market. The real question is will it be there early this year? So that's definitely what I would be looking at there if I was taking the silver price, Tina. Let's see, Lebo, is this the first live stream of the new year? And if yes, I'm very happy to be here. This is the first one, Lebo? The first one of what, about 250? Something, well, yeah, so yeah, pretty much 250, 225, somewhere in there. I'm tinkering with a few other ideas. I might go back to a couple of streams a day, maybe do just a news brief where I break these streams up and we focus on news maybe here and maybe do some Q&As and then maybe do just our technicals, because a lot of times these streams will start running long if I try to jam it all in. That's for sure. But absolutely, Lebo. First stream of 2026. I'll tell you what I thought of 2025 here in a minute. right before we sign off. I don't want to. I will not go negative into the new year, but I didn't care for 2025 too much at all. I didn't like it at all. I saw some things happen that shouldn't have happened, and our markets were not good. They really weren't good. Let me see. T. Marine. All right, here we go. Shane, what do you think the next best precious metal is behind gold and silver, copper? A lot of folks are going to point you towards platinum. I really like copper. I'll show you a copper chart here in just a second. Copper is going to be, I like that demand idea. I like the idea of needing it, not just, I mean, we need platinum, of course, but not like we need copper. When you start looking at copper, let's just go ahead and take a look at this pair. We'll get sort of into it. So here's your copper. That's your copper market. Now, you can see that I haven't analyzed copper in a long time. More than likely, I was running my Fibonacci back there, and that was in November, okay? Maybe even, maybe even right here. Could have been like a week in October. But take a good look at what's happened here. Did we call a bullish copper market? No, we sort of figured. Gold and silver are on the move. We're sort of figuring it. But look at that. Never, ever, ever, ever underestimate the power of key numbers. Look at that yearly high. Yearly high is up at 598, right beneath 6. Look where you went. Right beneath that. My guess is, T, if you're talking about copper, that's probably where the money's going to come in. You're going to get the explosion up over 6 and then just look to buy pullbacks. I really like copper a lot. I think it's a fantastic commodity. Its industrial uses definitely have me leaning on it. I remember back in my construction days, we always were stringing copper wire, and that's basically how you get electricity in all these houses. Is copper wire, and it got to a point where copper spiked so much in price that you had to keep an eye on your job sites because people would break in and steal all your copper wiring out of them. A lot of folks to stop the thefts, they would put out what they call dummy wires, which were like a hot wire. So you'd have a copper wire that was just dead. You're pulling your copper wire. Then they would put some other wires. They'd have it on a closed circuit, and that would be electric. That would be hot, what you'd call a hot wire. And they call that dummy wires because some dummy is going to get under your house and try to steal your wire, and they're going to grab onto that hot wire, and that's a serious deterrent. So I remember those days, though, back. I mean, I could pull a chart, I guess, but there was a major appreciation. I wasn't here. I wasn't building houses then, but in here. So for the longest times, like back in 2000, you just had a dead copper market. I mean, it really was free. So when we were building here, this would have been sort of this run up and then this run up right in here when we went from about 1.5 to 3. That's when not everybody, but that's when the criminal element got involved and started stealing a lot of copper off those job sites. That was the housing boom right there of March of 06. I was involved in that. We made a lot of money from 06 to 08. Actually, 04 to 08, we made a lot of money, and then after that, it got really difficult. And then you could see sort of the financial bubble pop right there in July of 2008. That's right before, Bear Stearns. Bear Stearns went bankrupt right in here. That was sort of when the housing market, we knew that was over. And then copper absolutely tanked because the demand for copper tanked. And now it's a new world. You need metals, you need conductors, especially with AI and the amount of energy you're going to need to do that. So there's a lot there. Let me see, T. They stole copper plumbing too, didn't they? Copper pipes. Good call, T. Yep. They were stealing the wire and they were stealing the pipes. That's sort of when everybody went into the flex pipes. Now the flex hose you see, which basically are plastic. But yeah, in the old days we always used copper, and you'd have a soldering gun. You'd solder the copper pipes, and that's how you did the plumbing. But they would, back then, when that copper rallied, they'd steal everything. So if I'm trading copper right now, I'm definitely bullish, but I am aware that I'm not making all-time highs. 6.6 is definitely huge. Something like this on a pullback, I mean, that's just sort of my trick that I use on all these markets, and it's fairly good. 53, let's see, 534 down there, maybe 53, 535. Not bad, not a bad area. Watching these closely to start the year. Let's see, Euro USD. This is one that I'm probably going to have a trade idea out. This may be the one that we want to hit early next week. Very good signs. I'm seeing great market structure here right from November's lows, and then a nice weekly chart. Nice big rally up there to what we saw right before Christmas. Nice high right there, 118. And then there's your pullback about 0.5% this last week. And then you've got just a nice 38% level right around 116.86 for the Euro USD. That's pretty good. That's not a bad one. That's not a bad one. That could make the cut into our trade idea for later today, and that's going to be out. You'll be able to review it by Monday's open, but that's going to be out much later today. It looks like a few other things to take care of. U.S. dollar, Japanese yen. This is our 920 EMA crossover. By far, one of the things that I took away from 2025 that made me happy was the performance of the 920. Now, I take a lot of criticism online. We get a lot of compliments and a lot of criticism on the YouTube channels, and a lot of it's around this 920. When you dial in the 920 on the correct time frame, forex, 4-hour charts, daily charts, you have a real strong trading strategy, or at least the basis for one. Now this is tough trading, no question about it. You had a buy signal right there. That was brutal on the 26th of December, the 26th of December, day after Boxing Day. I don't know anybody that's trading Boxing Day. What do you think happens? Pretty much loses. Goes down, then you get a sell signal on the 29th. Then you come back and you have a buy signal right there before New Year's. This stretch is why you just aren't really looking to trade during the holiday season. The volumes aren't there. It's just not there. So we had a real nice one right back here on the 17th of December, really the last big bid, right? So you got the dollar yen, and then there's your big run up. So I got a lot of questions right here, a lot of questions. And I put something out on Twitter that said the carry trade's dead. All of a sudden the BOJ's raising interest rates. It's really going to destroy the carry trade, and that's a wrap. Everybody's going to, restructure the global order. Cats living with dogs. Pure hysteria. Well, initially, when the BOJ says that, we're going to keep raising rates, and they raise interest rates, that should have been a big bearish driver for the dollar yen. I mean, the yen should have gained ground on the dollar, and you look at the initial impact, and that's just not what happened. The market absolutely reversed it. It broke high about 200 pips. So a lot of people were, basically wondering, they said, what do you mean? You meant this was going to be a bearish type of a thing? And I always say, in the short term, you have to stay grounded. After a big-time announcement, or after something that is a sort of historical event, or maybe even a surprise event or something of that nature, the price action is chaotic. You got to remember that everybody in the world is in there trading opinions, and most of them are bigger than us. What would make the dollar yen go up like that? Well, number one, we already knew the BOJ was going to raise interest rates. We already knew that. What came as a surprise is in the statement they said they were going to continue to do so, which in effect would unwind the dollar yen carry trade, which to the layman, that means you're just taking you're taking your dollars and you're holding them against the yen because you're expecting the yen to always be below the dollar. So the idea is the dollar is always going to be gaining strength against the yen, at least proportionally speaking, meaning you're going to be in a position to gain over time. So when you carry one currency against another, you just prefer it. So the dollar yen carry trade essentially was, okay, I'm going to hold the USD JPY to the long. I'm going to buy it. Why? Because I believe it's going to rise over time. And honestly, beginning in 2020, you were right. You made a fortune. That carry trade for the last 5 years has put a lot of bankers' kids through school. Believe me. That carry trade, 2021, I mean, let's just go back, get our way back machine. I mean, we were there. And if you watch, I don't even know where you could find the old live streams. You could probably run some searches here in the trading room. But, I mean, this was it. Or 2022, excuse me. They all run together. I mean, take a good look at this. This was the carry trade of all carry trades. We knew it was coming too. Why? Because the Fed had to start raising interest rates. They had to. Inflation was already out of control. We knew what was going to happen. And you could see, I mean, legitimately, the bid, even after the first big month, was at 121. You're at 156 now. So that type of trading is, what rich folks do, what high-impact traders do, what institutional traders do. They figure out ways to get their swap fees down to nothing, and they go ahead and they just hold these things. That's a carry trade. A lot of folks believe that's over now. They think that because the BOJ is going to go into a tightening cycle with the idea that they're all of a sudden going to protect the yen, which you see me smiling right now. I'm laughing. I'll believe it when I see it. I think tightening sounds good on paper, but you're going to see that's going to go away real quick in 2026. If we're talking tightening yen by May, I will be shocked, absolutely shocked. They're not going to do that for very long. But right now, that is the sort of the key. So the question was, well, shouldn't this thing go way down? And I said, well, initially, no, it doesn't have to do anything. Why? It's baked into the cake. We already knew. The markets already knew. This was probably the short squeeze of the century right here. Somebody came in and blew out the shorts, and now what happened? Price goes right back down, and it's just sort of meandering around waiting for the volume and the participation to get back in the markets. So as I look at this chart, 4 hours, do I want to be holding longs? I'm neutral. I'm indifferent. I don't even care to be taking any positions right now. Monday, probably not either. Tuesday is going to be a different story. That's going to be something we can really sink our teeth into. All right, let's see right here. We got a couple questions. Let's see. Slim, I've personally adopted the 5-8-13 from you. It's the only way I trade. Thank you. That's great, Slim. 5-8-13 EMA crossovers. I love it on the intraday. On the intraday time frames, I'm a big fan of the 5-8-13. The 920 to me is more of a swing trader. We had a lot of success with the swing trading. That natural gas trade was an absolute banger on the daily crossover. Those of you that were here remember it. It was a really good one. Okay, so what do we have on tap for 2026, early 2026? Well, here it is. Week 1, this is next week. We're going to be up and rolling. ISM PMIs, I expect a chaotic, quiet Monday. I really do. I'm in no hurry to dive into this market. Tuesday, German CPI, S&P Global. Business is going to be coming back Tuesday. I expect some moves on Tuesday. I don't expect much Monday, but I could be wrong. Nothing really news-wise out that's going to shake it up. We might get some movement out of the euro, out of Germany's CPI. Everybody's watching inflation. Wednesday's when the game's really going to heat up. You've got EU CPI, which is going to be big for the euro, but our employment numbers are going to be everything to open this year. It's going to be like, it's not going to be the Super Bowl. It's not going to quite be the Super Bowl. The Super Bowl is going to be when we get rid of Jay Powell as Fed chief. But when we start talking about the jobs numbers, that's definitely a playoff game. So you're going to see some interested parties looking at these jobs numbers, and it starts Wednesday. ADP employment report, JOLTS jobs, those are both out Wednesday. That's going to shake things up. Thursday, weekly jobless claims. Typically does nothing. There's going to be more eyeballs on these because they want to see the jobs numbers coming out of the holiday season. And then Friday, we've got NFP. I'll have NFP live for you. We'll be up early, and we'll be dealing hard in that environment. So I'm interested in what's going to happen. As far as today, nothing. S&P Global Manufacturing PMI, that means less than nothing. Don't even focus on it. Came in a little bit less than expected, or came in as expected, but less than the previous release. That means, believe me, that means less than nothing. Our interest rate expectations, these are things that we are going to be watching as 2026 develops in a big, big way. Right here, we are expecting about, an 80-something% chance, 85% chance that January we're going to hold rates firm. That's going to be controversial. That's really going to be controversial. But over the holiday, we saw a GDP print of 4.3%, which was absolutely huge. So if GDP is up at 4.3 and your jobs are better than you think and inflation's flat, there probably isn't going to be much impetus to cut interest rates just yet. But believe me, they're going to get to the rate cuts. It may not be under Powell again, but they're going to get to them, and it's going to be a little bit later this year. Right here, this is the other chart that we're going to be referencing throughout the calendar year. Interest rate expectations, target rate probabilities for the 8th December of 2027. You go, Shane, we just had December. You're already looking at next December? Yes. Yes, I am. Look where the bell curve resides. It only resides a few basis points lower than where we're at right now. This is what we call a normal distribution or a Gaussian curve. Don't worry too much about any of that, but this is just a normal distribution, and what we've got to the left is really where I'm looking. So in my opinion, you're going to see by this meeting right here, you're going to see the prime rate somewhere down in the 2.5 to 2.25, maybe even a 2 range, and you'll notice those probabilities aren't even on the chart yet. So that's why I'm smiling. I'm seeing a lot of possibility here to get some really good trades because our markets are expecting interest rates to stay relatively the same, maybe down modestly. I don't see that at all. I think you're going to see a major, major shift in the political winds here. It's an election year already. Midterm elections in 2026. Huge impetus is going to be placed on your U.S. economy. You're going to get a new Fed chair and 11 new FOMC members or 11 members are up for review. I think you're going to see this right here, in my opinion, is completely wrong. It's completely wrong. So we're going to see it. That's for sure. They work on all time frames. Yeah, Slim, I love the 5-8-13. I think it's a really great way to trade. And the best of all, it gives you some good guidelines and discipline before you roll in and start really trading size. We're going to talk about trading size on Monday. There's a couple of trades out there that are pretty darn good. They're pretty darn good. There's one that I may have missed the boat on. I'm a little bit frustrated. And this is your Shiba Inu chart. 4-hour EMA crossover. I wasn't looking at that. I was just looking at your basic, the way that I like to do my analysis, my Shiba chart. And this is what I was looking at. Your all-time lows are right down there at 55. We were very close to that. And I think we're going to take another shot at it. But when you take a look at the explosive, the way that this coin can bounce, it is incredibly impressive. There clearly are bidders in there. We don't really have a real-world application for Shiba Inu, but, you know, it's like that Shakira song, was it The Hips Don't Lie? The price doesn't lie. We're up 10%. You're up 10% in a week. I mean, that's no joke. That's the kind of return that I look for out of something like a Shiba. When you show up and you play an altcoin like a Shiba Inu, you need to be looking for explosive gains to the top side. You're not looking for a slow grind. You're not looking for a slow grind to 1 cent where you can become a 50 millionaire. You're not looking for that. You're looking for pops. 10% pop here, 15% pop. We had a 40% pop, 18 months ago in Shiba. That's what sets the table for big profitability, especially in crypto, is getting those pops. Now, is it risky? Of course it's risky. That's why when you buy something is when you make the money, especially when you're thinking of investing. Now, the top side of playing crypto, especially on the cash market, is there's no fees, there's no rollover fees, there's really no spreads. The only thing is liquidity. You're going to have liquidity issues when you try to get out sometimes, but if you go through the certain vendors, that's really isn't a problem. The biggest thing I would say is you have to be patient and you have to wait. Right now, we see people bidding Bitcoin from 90,000. That's a great sign. That shows that we probably, I would be willing to wager that we go up and touch 100 by the end of January. Is it worth it? Is it worth trying to, take that trade for 10%? Shiba's up 10% this week. I don't know. That's tough. That's tough for me. All right, we're going to definitely dive into crypto, though. I like crypto. I like some of those trade ideas, and I think we're going to have an opportunity to nail a few of them. I really do. Bobby Bob, Happy New Year, Coach. Happy New Year, Bobby Bob. I think that, glad to see you tuning back in for 2026. Remember, the dedication and the stick-to-itiveness is big. Bobby Bob, you're here all the time, and you're in the markets, and that's what it takes. If you're going to become good at this, that's what it takes. It's not going to be a fast thing for most people. I was asked earlier today, Shane, what do you think? How long should this take me? And I said, it's different for everybody. It's different for everybody. Depends on your aptitude, how familiar you are with markets, how comfortable you are with the idea of price action and price discovery, how much money you have. That's a big part of it. That's a big part of it, reaching your financial goals, especially if they're big. So I'll tell you what I was told. How long does this take? I was told when I started you should have your ducks in a row in 6 months. Now, that doesn't mean you're going to be a complete trader in 6 months. That doesn't mean that you're going to be able to step in and do the tick scalping stuff that we're going to do more of, where you say, okay, we're going to make 10 ticks right now. It's going to take you a while to be able to do that. But 6 months, you should have an approach. You should have your money management. You should be comfortable in front of a screen. I think that's a pretty good guideline, 6 months. Should you be profitable in 6 months? I recommend starting slow, but you should start to see some green shoots in 6 months. I really believe that. And, we'll talk more about that as the year goes on. We'll do a lot of psychology stuff, probably more workshops. We just got to wait and see exactly what the format of these live streams goes. There's going to be some big changes, and I'm just curious of how we can deliver the best content to you guys. That's the whole idea. All right, here we go. News time. Negative news time? Yeah, pretty much. Iranian protests. We've got the Iranian currency crashing right now. You've got incredible unrest in the streets. Iran protests sparked by failing economy turned deadly. There's a lot of speculation about what's going on in Iran. I don't really know. I'm not there. But we saw these statements were made. Trump says U.S. will intervene if Iran starts killing protesters or locked and loaded. So that suggests that there could be another incursion between the United States and Iran, just like last summer. I don't necessarily know how this is going to go. Potentially a bullish market driver for gold and crude oil and commodities in general. Typically, war sends commodities higher. So we're watching this situation closely. There's a lot of talking heads out there that believe that war with Iran is imminent, that it's going to happen this year. I don't necessarily believe that. I don't know really what to say about it, but I do know that these types of pledges and things, you're probably going to see some more airstrikes, at least. And so right there, Trump says if Iran kills peaceful protesters, the U.S. will come to the rescue. Supposedly, it's already happened. So if that's already happened, be ready for fireworks over the weekend. In other news, Venezuela. I've talked about Venezuela for 2 months now, 6 weeks. We haven't got the invasion. You haven't got really any huge, large-scale attacks. We saw some bombings, a CIA attack, I believe, on a dock somewhere in Venezuela. We've seen a lot of strikes on the ships. They were supposedly trafficking narcotics to the United States. Now we're talking about talks. Maduro wants to come to the table and maybe cut a deal. I don't know if that's even possible, but it definitely will de-escalate that region and potentially stabilize the WTI crude oil marketplace. So we're watching Venezuela closely over the weekend. We're watching the Iran situation closely over the weekend. These things are potential bullish market drivers for commodities. So we are definitely interested in what happens in these regions to start 2026. Those are the big stories. For right this minute, NFP next Friday is going to be a good one. I think that we're going to see a lot of interesting data and a lot of price action. All right, everybody. My final word on 2025 before we put it to bed. 2025 was a challenging year. It was a difficult year politically here in the United States and also economically here in the United States. Now, while many people believe that the worst is over for the U.S. economy and that unemployment's going to get back on track and inflation's coming down and that growth is going to be there, there's still serious questions regarding the geopolitical situation, and there's still serious questions regarding the future of monetary policy here in the United States. So 2026 has potential to have huge volatility across the board, huge volatility across the markets. Now, to sum up 2025, you had a changing in the political garb here in the United States. You had an institution of a collection of new policies, more executive orders than we've ever seen. We saw civil unrest at a high level. We've seen political assassinations. We've seen probably, I would say, the most heated media, social media, and political atmosphere I've ever seen in my 46 years on the planet. So I'm looking at this thinking that 2026 is going to be a superior trading year. I don't think you're going to get those huge sweeps in pricing, meaning you're not going to see the real choppy price action and then sudden jumps. You're going to see volatility. Things are going to go up and they're going to go down, but it's going to be in more of an orderly fashion. I'm almost convinced of that. Now, whether I'm proven right or not, it's going to be really hard to say. I'm thinking, though, you're going to see some rate cuts this year. You're going to see equities rise. You're going to see crypto rise. More than likely, you're going to see commodities rise, with the exception of energies. Those are probably going to stabilize, and stocks are probably going to head north from here. Anything can happen, though. Anything can happen. We're still waiting for resolutions in the Russia-Ukraine situation. 2025 was a disaster for Russia-Ukraine. Many people in the political arena, many people in the financial arena, including me, believed that we would see that war be brought to an abrupt halt by the Trump administration. It did not happen. It did not happen. In many ways, it escalated. So that, in that regard, that was a failure. You saw some other successes. Inflation seems to be tapering. I think the jury's still out on that, though. We're going to have to wait and see what happens early 2026. But for me personally, not the best trading year. Not at all what I was looking for in 2025. I think 2026, more than happy to at least show a little bit more for our time. 2025 wasn't bad, don't get me wrong, but there was some periods in there that were very challenging. And if you were a new trader and you took it on the chin last year, there's reasons to be optimistic about this year. If you're a veteran trader that was all of a sudden what you did stopped working, well, we saw serious outliers in the volatility department. A lot of the intraday announcements, they seemed like that last summer they were coming almost every day, and it really was manipulating the gold market something fierce. So we've got to be aware that we're probably not going to get as much of that this year. Remember, it is an election year here in the United States. That means the political rhetoric, even though you might think it's going to heighten and exacerbate out of the administration, it's not. It's going to sort of taper off, and the themes are going to be stability, growth, and prosperity. And if the markets believe in them and buy them, we will see less of that sharp, really what I call suicide volatility, and more of a predictable, wave-like, orderly volatility. And that's what we all want. That's what we all want. We'll be here every step of the way for you. Be sure to ask any and all questions on these live streams. That's what they're for. Interactive trading experience is what we're sort of shooting for here. And the idea is just to get everybody on the same page with regards to being profitable traders. And in order to do that, you need to learn a little bit first, and you need to learn about yourself and your discipline, dial in your strategy and your money management, and you're going to be in great shape. You really are going to be in great shape. All right, everybody. I'm going to go ahead and sign off for right now. We'll be back Monday. We'll have a fresh slate. Actually, a lot of live streams next week, concluding with NFP on Friday. Those are always fun. I look forward to those. If you have any and all questions, head on over to howtotrade.com. If you don't know what howtotrade.com is, head on over to howtotrade. HOWTO trade.com. You can sign up for a free account. It's complimentary. You can reach out to me on private message there. Ask me any questions you want, and I'm more than happy to help. All right, everybody. Team Marina, interested in seeing when J Powell's going to put in his notice. I would have lost that bet. I would have lost that wager. I had Jay gone by Christmas. But I think that you're going to see the transition out of Powell relatively quickly here. I think he's already lined up his next gig and is going to be looking to transition. But whether it's probably going to come, in the third Fed meeting of the year, something like that, I believe. We'll see. All right, everybody, thank you for joining me. Happy 2026. Have a fantastic weekend. We're going to come back with the first full trading week of 2026 next week. I'm excited. I'm ready to rock and roll. A little bit of psychology coming your way Monday. Going to give you some tips on how to get off on the right foot for the new year, but you definitely want to take your time and be patient. But the opportunity will be afoot. The next 160 days, going to be pretty good. Let's get after it. Let's get off on the right foot and hit your financial goals. Make 2026 a year to remember. You can do it. You just got to stick in there. Be tough, dedicated, tenacious, smart. Those are some of the things we preach on this stream. All right, everybody, have a fantastic trading day. Great to be back after the break, charged up, ready to rock and roll. We will see you back here on Monday. As always, trade the action well, and we'll talk soon. See you.